Welcome to the channel, guys. In this video, I will be breaking down the sell trade I caught on Euro Chef some days ago. And I actually did post this on my free Telegram channel. You can see right here on the 10th, I posted the chart breakdown. And also I got an entry on the same day. And I pretty much have been holding the sell trade for the past 4 days, securing a total of 129 RR on the movement, which ended up eating my take profits a couple of hours ago. So yeah, let's get right into the analysis. The first thing I do whenever I get into any chart is identify the direction of the market, where the market is headed, as that helps me better position myself for potential trade opportunities in line with the market direction. And this I like to do starting out from the weekly time frame. On Euro USD, on Euro Chef, as you can see from the weekly time frame, are clearly bearish. So to make that clearer, we pretty much add this impulse movement shifted us to a bullish market structure. Then we add the higher low right here. Then we add ourselves this higher low, and then this higher high. And then we pretty much shifted from what? Bullish market structure to bearish. Clearly, as you can see, obviously, what we started pointing us lower highs and lower lows, with this being the most recent lower low. So very clearly, we have the market direction to the downside. As you can see from the weekly time frame, the market is in a downward trend. Safe to be looking out for what? Selling opportunities only. Having clearly identified the direction of the markets, the next thing I do is identify areas of interest. I like to call them areas of potential trade opportunities. Since I've clearly identified this from the weekly time frame is in a downtrend, and I then want to be looking out for selling opportunities only, there's something I like to do, and that is box off the most recent higher low, lower low rather, because we're in a downtrend here. So this is the most recent lower low. Sorry about that. This is the most recent lower high that led to this lower low right here. So we have the lower high right here and then the lower low. So as long as we stay below this zone right here, we're still very much what in a bearish market structure. And then, like I said, the very next thing I like to do after identifying the direction of the market is identify areas of interest, areas of potential trade opportunities. And that leads me to marking out levels with the most touches. And what I mean by that, within this boxed off zone here, the lower high and this lower low, I want to identify within this level places where price had the most number of touches, and quickly looking very clearly at this. We have ourselves a bounce off from this level. So on one, two, three, four, five occasions, we've had price tested this level right about here, and then add some form of reaction off of the level. On five occasions, as you can see, right about here, we had the level acted as a resistance. The second time, a resistance. And then here we had the level acted as a support. Clearly, we're having to see the candlesticks above the level. And then the fourth time also, we're having to see the level act as a support. Fifth time, we're having to see the level act also as a support before eventually breaking past the level. So yeah, that's what I mean by identifying levels with the most touches. And then this becomes my area of interest. Having identified the direction of the market is to the downside, the next thing I want to do is identify my areas of interest, areas where I'm potentially looking towards sell in line with the market direction, which in this case is bearish. And then because on five different occasions, I've seen price tested this level and then at some form of reactions off of the level. This for me would be my ideal area of interest. If I would go a step further, the level aligns perfectly well with 98,000 psychological round number, as you can see. And then lastly, just in a bid to gather more confluences as to why my looking to sell from this level is a no-brainer, I would introduce the Fibonacci retracement tool from the previous swing high right here to the most recent swing low. As you can see, again, we're having to see this level aligning very perfectly with the 61.8 Fibonacci golden reversal level. And now this gives the probability of selling from this level even higher because the confluence is at play. Are kind of much from the very level. And then as you can see, we did retest this level. And as soon as we came right into the level, this is where you move to the very third thing you need to do. Once you've been able to identify your area of interest, then you want to wait for price to come back to retest your area of interest. Your area of interest, rather, sorry. And now once price comes back to your area of interest, guys, this is where you now want to pay attention to every one of the price action at the retest of your area of interest. So as soon as we came right into our area of interest, as we have identified, this is a key level. Previously, we had the level as a support, and then we're having to see price break below the level. A broken support becomes a new resistance. So because we're having to see the candlesticks below the level, in this case, the level is expected to act as a resistance, coupled with the fact also we have what? The level being what? 0.98 thousand psychological round number right at the level. And like we previously had identified also, in confluence here is the fact that the level aligns with the 61.8 Fibonacci golden reversal level. And then we came right into the level. What did you get to notice? As soon as we came into the level, we had ourselves was a nice rejection from the level. You can see how the previous weekly candlestick was very bullish. And then the next candlestick was a bearish candlestick, signifying a shift in momentum. Also what? Signifying what? That the sellers are rejecting what? Buyers from moving the price anyway past this level. The rejection candlestick here explains that for a fact, that what price was trying to get past this level, but because this is what indeed a seller's zone, you can see the extent of the rejection from the level, and then this ended up closing as what? As a bearish candlestick. And not just that, we had also the next weekly candlestick also closing as a rejection candlestick. In fact, as a matter of fact, we had what? 3 weeks of what? Rejections from this very level. Now, once you begin to see rejection candlesticks from your area of interest, this or a fact tells you that what? The chances of the level holding is very high. What this means is what? If price wanted to get past this level, it would have done that already. This level is a very potent level. The very reason why for 3 consecutive weeks, we saw price try to test and go past this level, but what? We ended up seeing what? Selling momentum come right back in, pushing price all the way back to the downside, closing as what? As a rejection candlestick for 3 weeks. Now, this is enough. This is enough confirmation that what? the market is indeed committed to what? Continue heading back to the downside. That's what the retracement has come to an end. And then what? The selling momentum has stepped right back into the market. But then the fact is I cannot what? Sell from the weekly time frame. Now, just to digress a little bit, the chances of remaining consistently profitable by sticking to just one time frame is very slim, guys. Now, this is where understanding price action in a multi-time frame perspective comes in very handy. So getting right back into it, we've pretty much identified that what the daily time frame is in a bearish market structure, the weekly time frame is in a bearish market structure, and then what we identified what price made a bearish impulsive movement and then started what retracing. We came right back into our already identified area of interest. And then we noticed that what as soon as price came into the area of interest, we had ourselves what price action confirmation that what price is indeed ready to what start heading back to the downside. Now, this is where we move downwards to the daily time frame. Moving down to the daily time frame, I'll very much be doing the very same things I did previously, starting out from the weekly time frame, and then that would be what identifying what the daily time frame is saying. Where is the daily time frame headed? As you can see right here, we add ourselves a shift from the daily time frame perspective to bullish market structure, hinting us what higher highs and higher lows. And then what? We add ourselves a lower RIT, and then boom, we add ourselves a structure shift from what? Bullish to bearish. So now we are having to see that what the daily time frame is in line with the weekly time frame. The weekly time frame is bearish, and then only at this level right here, we are having to see a confirmation of what a shift in the market structure on the daily time frame from bullish to bearish. From bullish to bearish. So the very first thing has been checked. Like I said, identify where is the market headed. So the daily time frame is headed to the downside. Very much what? In a bearish market structure. Safe to say what? Just like we did on the weekly time frame, we only want to be looking out for selling opportunities. And then this takes us to the next on our list. What then do? We then identify what? Our area of interest. We then identify our area of interest. And just like I said, how do I do that? I do that by identifying levels with the most touches. And very quickly, what comes to mind would be this level right here. And just like we did on the weekly time frame, you can see we had the level acted as a support right here. You Also, we're having to see again the level acted as a support right here. And then when we're below the level acted as a resistance. Also, the level acted right here as a resistance. We're having to see the level here as a support. Support. Then, so you can see what 1, 2, 3, 4, 5, 6, 7, 7 number of times we have had price tested this level and then what seen somewhat form of what reactions off of the level. And then what this confirms that this is a valid area of interest for me. And then pretty much what I was looking for was the break of this level, which we had right about here. And because we're below the level, in this case, we're expecting the what? As soon as we test the level is very much going to act as what? A resistance. We're below the level right here. Also confirming the structure shift from the daily time frame perspective would be the fact that we're having to see price into a daily head and shoulder pattern. The left shoulder, the head, and then the right shoulder. And then we had also a break of the neckline of the head and shoulder pattern. Now, guys, what I do is identify the direction of the market using the daily and the weekly time frames only. And then any time frames beyond the daily time frame, like the 4 hourly, 2 hourly, the 1 hourly, 30 minutes, I use for entry execution. So the daily and the weekly time frames is for identifying the market direction and also identifying my areas of interest. And once I do that, I then move down to the 4 hourly time frame and beyond to execute my trade entry. And because we've clearly established right here from the weekly time frame that the market structure is very bearish, and then also the daily time frame is also in a bearish market structure. We have two of these time frames in sync, and then we're having to see the daily time frame at the retest of the weekly area of interest printed us what a reversal chart pattern, being the head and shoulder pattern, which is a sell reversal pattern. And then as soon as we add the break of the neckline, if you know your chart patterns very well, you do know at the break of the neckline of the head and shoulder pattern would be the best time to look out for what your sell opportunity at the retest of the broken neckline. So as soon as we add the break of this neckline, as soon as we add the daily candlestick close below this identified area of interest, which also is the neckline of the head and shoulder pattern. This is where I move down to the 4 hourly time frame. Now, this is the cash, guys. I always love to see the majority of the time frames in sync. Now, what do I mean by that? What I mean is simply we clearly identify the weekly time frame is bearish, the daily time frame is bearish. So we have two of these time frames, the higher time frames, to the downside. And if I would go a step further into analyzing what was happening right here on the hourly time frame, we could see we had ourselves this, and then we had ourselves higher low, the higher high, and then we have the hourly time frame shifted from bearish to bullish market structure. And as you can see, pretty much what hourly time frame also is very clearly in a bearish market structure. So we have what the weekly time frame to the downside, the daily time frame to the downside, and then the hourly time frame to the downside. Now, when once you have the majority of the time frames in sync, there's no reason why you want to be looking out for what the opposite trade opportunities. What I mean by that is simply we have the weekly time frame to the downside, the daily time frame to the downside, and then the hourly time frame to the downside. There's no reason why I should be looking for buying setups. It's only safe to be looking for trade opportunities that are in line with what the market direction, the directional bias, like we have identified from the weekly and the daily time frame, which is a bearish structure. And then as soon as we had the break of this from the hourly time frame, and at the retests is where I had my entry confirmation for shorts right here. As you can see from the hourly time frame, we had a break of the neckline, the green zone right here, which also is our identified area of interest from the daily time frame. As soon as we had that break of that level, we're having to see price retest the level also. And then again, just to stack up the confluences, if you bring in the Fibonacci retracement tool from previous 4-hourly swing high to the most recent 4-hourly swing low, you would see that we had price retesting what? We had price retesting the 50 Fibonacci reversal level. And this is where I had my entry confirmation at the retests from the 1-hourly time frame for shorts. Right here, as soon as I had this bearish engulfing candlestick, bearish momentum candlestick close, 1-hourly bearish momentum candlestick close from the retest of our neckline being the daily area of interest. That's also where I had my confirmation for sell, my entry confirmation from the 1-hour time frame, and then my take profits targets. Moving back to the weekly time frame, bringing in the Fibonacci tool from previous swing high to the most recent swing low. I had my take profit targets for the negative 27.2, somewhere just close to this. $96,200 psychological level, somewhere just very close to the negative 27.2 of the Fibonacci. So this takes us back to the 4-hourly time frame. And as soon as I had my entry on that, I had to patiently wait for price to come right into my take profit level, holding this for a little over 4 days. And as you can see, presenting me a 1 to 9 oyster reward. On this right here. Guys, go ahead and give this video a thumbs up. If you find this video insightful, like and share, and do well to hit the subscribe button for more valuable videos like this. See you in the next video, guys.